When did this video ever become a classic, ever hit $1? All of the investigation is complete on our end. New calculations, including how much we'd have to burn, how much each market would be worth, and how much supply there would be if we reach $1 have been done, and the results are presented below. Therefore, let us jump right into this video. Token burn should be the primary priority if the price of moon classes is to increase, especially to the 1 cent, 10 cents, and $1 levels. We need to cut the quantity in circulation until we can easily reach this dollar amount with a fair market cap, like we have right now with a supply of $1. The market capitalization would need to be at least $6.5 trillion. To put it simply, this exceeds the entirety of cryptography. You can't do that. The solution is to raise prices without increasing market capitalization, and we may accomplish this by decreasing the amount now in circulation. As of right now, the most effective method we know of is this 1.2% burn, which is about to go into action. The 12th of September marks the date of its live chain implementation. The proposal to amend the parameters to increase the burn rate to 1.2% will be submitted on September 12th and will take about a week to go through the approval process. The burn rate will be officially adjusted to 1.2% on or around September 19th. On September 12th, when the burn goes live on the chain, I expect it to simply be reset to 0.0. After initially establishing it at 1.2%, we must now reduce it to 1% by hand. At this point, we can begin consuming the daily transaction volume on the Classic network. This chart shows that monthly token transactions Returner Classic are currently just below $2 billion at 2 billion tokens per day, which would equate to a burn rate of anywhere from $100 million to $130 million per day, or $3 billion to $3.5 billion per month. The more the price increases, however, this becomes an unrealistic assumption. There will be less tokens available for purchase if the average daily volume of transactions does not rise. That's why people over here talk about amounts between 18 and 54 trillion. Note that this is the case even if we never raise prices. Even though it should be impossible, the bone keeps going. So, these figures are all relative and they will inevitably fall. This is, however, the base revenue we can expect before the price increases. Knowing that the daily volume we could reach could be in the hundreds of billions of tokens, how much of the total supply would we need to reduce before we hit $1? In any case, we've calculated that, too. Here, we can see that the price is holding steady at 1 cent, with the market cap remaining at roughly $650, $700 million. We are currently charging more than twice as much. However, if you were to buy all 6.5 trillion of them right now, you'd be looking at a price tag of $650 billion. That's a 90% cut in the total amount in circulation. If we were to wager, say, a tenth of a dime, we'd guess the number is somewhere around $65 billion. The supply would be between 650 and 700 million, and the price would be 1 cent. It goes without saying that $1 is required. The market capitalization remains unchanged. Here, however, market values and circulating supply converge. Even while some of the higher price targets, like $1, 10 cents, or a cent, are possible if the math is good. I want to make that point abundantly clear once more. How likely is it that I will obtain a 1000 or 1000x, resulting in $1? It's quite improbable, of course. This will take a long time, years even if it is possible. Individuals will be trading goods and services, assuming consumers have made a return on their investment of 10, 15, 20, or even 40 times their initial outlay. The volume is expected to be through the roof. Please do not put any additional money into the market based on these higher price objectives, however realistic they may be. Losing them won't ruin your life too much. Don't forget to do your own digging either. Don't take this video as a joke to invest your life funds, because the price goals we're discussing are completely insane. While these goals may seem impossible at first glance, I assure you that with the right combination of market cap growth and supply reduction, we can achieve them. For example, if we double the market cap and cut the supply in half, we might see a 100-fold increase in price. In such case, you're right. Assuming we succeed in raising the market cap to $6.05, $7 billion, that will represent a 3, 4x gain over current valuations. We might hit the penny milestone with a circulating supply of $650 billion and a market cap of $6.05 to $7 billion, putting the price at 1/10 of a penny. To get to 10 cents, we need to cut the supply down to $65 billion while maintaining the current market conditions. And then to achieve the dollar threshold, we'd need to cut the supply down to $65 billion once more. If we were able to increase the market capitalization to $65 billion to $70 billion, this would be even more than it was when the Classic was selling for $100. We can get the total number of coins in circulation down to the low billions, but only about 6.5 billion. Not an easy task. Yet if that happened, the burn would be close to 99%. These price goals, such as $1, are certainly attainable, but only in the event of a massive bull run in the cryptocurrency market, and more crucially, if Terra Luna Classic provides actual value to its ecosystem. Because of staking, the current daily burn rate of 50 billion to 100 billion tokens will decrease significantly when the price of Ether rises, as was discussed in the Bowen statistics. Keeping daily transactions in the billions of dollars is essential. Over the next 3 to 5 to 10 years, we need to reduce the supply to the low single-digit billions. If we want to achieve our price goals while maintaining a steady burn rate, we'll need to maintain a very high burn for a considerable period of time. Unfortunately, we can't rely on fear of missing out, FOMO, which is what's driving up the price of a Territory Classic right now. Why it's so unstable depends on this. The re-enabling of staking for Territory Classic, which has already taken place, is crucial because, as a proof-of-stake chain, it enables a Territory Classic blockchain to function, have projects begin building on it, and offer real, genuine value. And that's why I believe the 71 projects we've already built or are building on Territory Classic, along with the hundreds of thousands of new projects we'll hopefully have built on Terra Classic in the future, will be able to sustain that volume, keeping it above the 1 to 2 billion mark in the long run. Repacking us to the Terra class at USD would be one option. Furthermore, we have first-hand experience with the burn's effectiveness on Terra class at USD. With the recent volume, we would be significantly removing the industry from contention. When the 1.2% burn is implemented on Terra Classic, it will also be implemented on Terra Classic USD. This, as I've already mentioned, would open the door to repurging the two coins, which would have enormous consequences due to the restoration of the old Terra Classic chains, dApps, and utilities before its catastrophic collapse. And certainly the volume on the blockchain was around the very minimum of $1 billion per day. Upwards of $2, $3, $4, even $5 billion per day traded for Terra Classic before the massive collapse. You can burn through 99% of the supply or hit